Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, host of the Smart Property Investment Show, executive editor of real estate at Momentum Media. It makes me sound awfully important and special, but I've probably got one of the best jobs in real estate in Australia. I get to talk to property investors and people that work inside of property all over the place and trying to give some sense for this market, what has been through COVID-19, some of the challenges that everyone's faced through it. It's been nice diarising it twice a week on the Smart Property Investment Show. So if you only just found us, welcome. If you've been listening to us for a long time, thank you. We enjoy what we do here. It's just not myself behind the mic. I've got a great team of people who make me sound good. They get rid of my ums and ahs and do all the heavy lifting to give me the great job, and that's talking to people around property. But I've enjoyed this journey over the last couple of years, really. February 2020 is when sort of COVID kicked off, and thinking back then, the way we're thinking to where we are now are two very different markets. Back then, a lot of the banks were quick to come out telling us that property as an asset class is going to crumble. There was a huge bubble and we could all expect 20, 30% drops in capital values, which hasn't happened. We all know that. We've all seen property investors' great growth over 2020 and 2021 in particular, and that will continue. It would appear into 2022. We'll chat a little bit about that today, but I think most of the banks are forecasting negative growth in 2023, but these are the same banks, let's be clear, that told us that property was going to drop by 20 to 30% back at the start of COVID. So you work out who you want to listen to in this regard. Don't listen to me. I'm just a journalist. I just sort of talk to people about this. It's my job to make sure I can extract that information as well as I possibly can. But it's been a good year. I know a lot of people are sort of looking forward to the break, slow down a bit, hang out, think about where they're going with their property investment journey and how they can approach it moving forward. So food for thought. Keep tuning in over the break. We're going to be recording per our usual schedule. So you will never miss a moment of listening to me drone on around property. But I apologise for that. Maybe I can get some elocution lessons to speak a bit better. But I've got a really good guest in the studio today. I've been wanting him on for a little while. I'm going to get some inside views. I'm going to try and get him to tell me what's going on. He's pretty cagey, this guy, but I'll do my best to uncover what's happening. But if you're a new investor, if you're a first-time investor or you just recently to this, we've done some pretty cool stuff. You can go and get it on smartpropertyinvestment.com.au. It's the first ever secret sauce buyer's guide to getting started on your property investing journey. And it's powered by partner at Bluestone Home Loans. We've done all the heavy lifting for you. We've done all the hard work. It's a cool toolkit. We can get you underway. You can fast track your finance to get started on your first purchase. And it's using one of Australia's leading non-bank lenders, Bluestone Home Loans. You can go and check those guys out. You can Google them if you don't know who they are. But you can jump onto the smartpropertyinvestment.com.au homepage, register your details. You can download this report. Go and check it out. If you're new to property investing or you're still a bit unsure about what it all means, or you just want a really good refresher, download it. Go and check it out. We've done the hard work for you. All the info's there. Joining me in the studio today, Sam Gordon, Director, Australian Property Scout, regular guest. I've enjoyed watching this guy as a property investor initially, but then also as a property professional build out his career. And my notes here tell me he must be doing pretty well. He's been shortlisted as Buyer's Agent of the Year at the REB Awards in 2022 and also Buyer's Agency of the Year at the same awards, the REB Awards, which are the big awards for real estate in Australia. So that must be Sam Gordon, the individual Buyer's Agent, and then Australian Property Scout, the Buyer's Agency. Mate, you're doing something right, Sam. What's going on, mate?
G'day, Phil. How are you, mate?
I'm all right. Mate, tell us about these shortlistings. You must be pretty stoked about that.
Definitely am, mate. Yeah, I'm pretty pumped, obviously, for both of them. Well, I was up for the Buyer's Agent of the Year last year as well, which was pretty awesome, pretty humbling for only essentially the second year in business that we were at the time. We've just had an awesome year of growth and of great results for clients as we've grown as well. And yeah, mate, we've grown the team, and it was pretty awesome to kind of make the shortlist for Buyers Agency of the year as well, mate. Definitely pretty stoked with that.
Yeah, and I should know when these are on, but I'm going to guess March of 2022. Yeah. And I saw you there last year. You were sitting with some folks. I said g'day, and I think we had a quick glass of champagne. I think was what we had back then. But,
we did, mate. We did.
It was a big night out for you, wasn't it? Out from the Gong up to Sydney into the big smoke. The glitz and glamour, ball gowns and tuxedos.
Yeah, mate, that was the first time I'd ever worn a tux. It was good, mate.
The first time you've ever worn a tux, is it?
Yeah, man. Mate, I was out of school at 16, mate. I was out there on the tools working hard. I didn't go to any high school formals or anything, so I've never worn one before.
Wow, mate, look at you now. So I hope you sent some photos to your mates or you put it on the Facebook so they can give you a hard time about it. But we must have spoken first time three plus years ago.
2019, I think it was. 2019. Yeah, when we first caught up. Yeah, back in 2019.
And you grew up by memory out in some land out the back of the Gong there as doing rabbits.
It was, man. Yeah, it was.
It's actually rabbit. Yeah, rabbit farm.
Yeah, it was. Yeah, it was. My old boy had a farm out the back of the Highlands. It wasn't a big farm. It was just like he had like intensive kind of rabbit farming. He did he sold it early 90s, but they were still producing the stock feed. So yeah, we were kind of working on it with him. I was working on it with him for ages out there. Grew up on the farm, and yeah, made the move down the Gong a few years ago. So
was that your trade, like farming? Were you farming?
No. That's what we did. We like produced all the stock feed for a lot of different kind of animals and yeah, I guess livestock right around the country. So it was pretty cool. It wasn't a huge operation, but yeah, mate, it was cool. It definitely got me into hard work at a pretty young age, put it that way.
Yeah, and this is the journey. You see a lot of people in property, and you see it on the Smart Property Investment Show. It's funny how often it happens. They come and have a chat. They're a property investor. They love investing in property. They see or they realize it is a wealth creation journey, and then they just develop a passion for it. It becomes their profession, and you're very much fallen into that domain. But it must be quite serendipitous for you, mate, to actually sit there and go from grafting on the land, and that's hard yakka, right? Like, it's not easy work to most of the time now your job is talking to people and negotiating and persuading and influencing, and that's pretty much the gig. It's very, very different.
It is, mate. It is. But I think that's actually probably why I do all right at it, because I don't come from like a sales background. I've never done a sales course or anything like that. Like I come from, just pretty much like a genuine background, hardworking background. I think that's always resonated a lot, both with agents and with clients. I think that's why I've always been able to do pretty well from that side, because I don't go in with a sales tactic script, anything sort of like that. I was going with the way I know how to negotiate on property and just pretty much work it from there. So it's always worked pretty well for me, mate.
That's cool. And I don't want to give too much away. We're going to get you back on in January, and it's a bit of a milestone episode for you and your own property journey. You're a pretty sophisticated investor. I'll definitely put you into that realm. We're going to break down your property journey, how you've gone about building out a significant portfolio and trials and tribulation. I know you've been pretty active this last year, so watch this space. But purpose of today, mate, I wanted to pick your brain about what's going on in property, but I'm super impressed by the growth of your business, that you've turned this passion into a profession. Do you feel like you go to work every day, or is it just something you just enjoy doing so much?
A bit of a mix. I don't look at it too much like work, because I love doing it. I've lived and breathed property now for over a decade, but now it's awesome to have built out a team of very like-minded individuals. It's a very different team to probably what you'd expect with who we have in on board that work with us as well. Yeah, man, it's awesome. It's sometimes it can feel like work when you're still up at 10 o'clock at night and you're pretty knackered. But if you're getting the right results for people, mate, that's all that matters, and it definitely all pays off, that's for sure.
So how many, as a buyer's agent, and that's what Australian Property Scout does, how many deals would you sort of have on the go at any given time? Like, how many properties are you actively negotiating on at any moment? You must have a pretty good system or memory, at least, to try and work out how to keep on top of it all.
We do. So we're up to, actually within the business now, we're up to 5 buyer's agents within the business, including myself. 5
buyer's agents? Wow.
We do, mate. Yeah, so 4, there's myself and then 4 others. It was just myself in 2019. I brought my partner, Morgan, on board in 2020, started 2020. She was originally a real estate agent, Brizzy, for 5 years. Then we just worked together and then slowly added in, another person, trained them up for 3 to 6 months, then brought another one in, trained them up for 3 to 6 months. And pretty much just picked all the different areas that I really wanted to invest. I didn't have the manpower at the time. It was only me and then me and myself and Morgs. And then, as it kind of grew, I was bringing people in, and I'm very much about becoming area specialists. So I won't have a guy covering the whole of Australia. I have them very, very fixated on an area or 2 areas. They become area experts in that. And really, that's how you win at property, right? You become an area expert. You know what things are worth. And then it's all about beating that kind of market value. And yeah, that's pretty much what we've built out. So it's been cool, man. It's been a cool journey, kind of training those people up and building that out.
So I guess your thesis, your thesis is your team members within Australian Property Scout are actually live and operate and work inside the areas where they're buying.
Yeah, pretty much.
So the question I need to ask is, where are these people located? And you're going to tell me I'm not telling you. Is that what you're going to say? That's what's going to happen.
I can tell you that they're based in Australia. So
are they regional?
Yeah, there's some regionals. There's definitely some regional fellas within it. There's a lot in the cities as well. So we've got a good spread between the regions and the cities. We're spread between 4 states at the moment. So we're pretty active.
Tell me what states they are at least.
I'll tell you Queensland's one of them. It's a pretty good location at the moment. But back to your question, but I guess before, like how many we're working on, quite honestly, man, we've been negotiating on hundreds of properties per month easy. Like we're constantly working on crunching, negotiating, binning, like so many different deals always working on. You have to have that really good flow and kind of consistency of stock to be able to work through to find the really good stuff. Yeah, so it'd be easy hundreds of property per month that we're vetting and either discarding or putting together for clients.
And what bit of your job do you most like? Is it actually going, okay, done deal, we're set for a good price? Is that the bit you like the most?
Man, it's a mix. So I love that. Like I love pulling a good deal together. I love a good off-market coming together at a cracking price. But I love the strategy side with clients as well. And then them getting their, that strategy coming together and them getting their win and refinancing equity back out in, 3 months or 6 months and rolling it into the next one. Or finishing like maybe a big renovation project again, revaling it, getting rents above what we thought we were going to get and then going again. It's very much a journey. I think what I love about it, obviously I'm a fair way through my portfolio at the moment. I've built out a fairly large one myself, but watching these guys in their early stages and building it. And even like everyone in my crew, like the whole team, they're all investors. We like property investors. We don't have, I've got a couple of share guys doing this, that nothing. They all live, eat and breathe property. And I think that's an awesome part of it. They're all like at least 2, 3, 4 properties in. Like even Morg, she bought 3 this year. Bought the first one at the start of the year, refinanced equity midway through, bought another one, and then just bought a third one as well. 3 properties in 12 months. So it's pretty
I know you've had the pedal down. The bank's happy to lend you money. We'll talk about this, when we get together at the start of the year, because I really want to break it down. But just, starting your own business, going and all that sort of stuff. Bank, no issues sort of getting finance? Complicated, I would imagine.
Look, it is, but you've got to take a lot of people will get to a certain point of their portfolio and only get offered second and third tier lenders. And then they'll go, I don't want to touch them because the interest rates are 0.5% or 1% higher. There was a lot of buying that I did during COVID where I was under 2 years within the business and I had to do a lot of low doc lending to buy stuff through COVID. But I could see it was the absolute bottom of the market. The prices we were paying for properties were ridiculous, especially in the markets that I were in. And I didn't have a huge batch of clients that I could fling all these deals out to. So there was a lot of time we'd pull awesome deals together and not even have anyone there for them. So I was pulling together like low doc lending, like things that people would look at and go, I wouldn't even pay, like even consider paying that. I know there's a couple of commercial deals I put together on unit block, like commercial interest rates. I was paying over 5% interest to put them together. But when the market comes back to a level of normality and you can get especially when you've got that really good cash flow stream starting to come in from the portfolio as well, I've just gone through a massive refining all those properties, stripping some equity out and refining them all back down to rates down in the 2%. But a lot of people wouldn't have built that portfolio during the time frame, during COVID and even this year as well, and paying those high interest rates. But when you're willing to do it, and by the way, there was only one property that was over 5, but there were plenty there that were within the kind of 4 at third tier lending. But if I hadn't bought the properties that I did, like each property easy in 12 months up more than 100, 150 grand per property. So I think it's one of those things. A lot of people are hesitant to go to that level, but if you want to build a big portfolio, it's something you got to embrace. It's the cost of doing business. Yeah. And realistically, as long as you're working on and managing your cash flows and building out good cash flow streams at the same time, it won't affect you anyway. You should be in front anyway. You shouldn't be behind.
Yeah. You need to be an active investor. Sort of passive investment in property investment doesn't really exist. You still need to keep on top of things. But if you're going to put the accelerator down, you see a young bloke as well. So you're using this time well. And in some ways, some people would sort of say counter-cyclical investing, where you're investing when other people aren't, or you're investing in ways in which other people choose not to. Your eye on the prize is obviously accumulation of good properties that over time will continue to grow and deliver some sort of cash flow. You're not too concerned about paying a little bit more in interest rates because it's just the cost of doing business. And no doubt your numbers stack up. Sam, what I want to get into while I've got you, mate, is getting some sense for 2022. We've sort of touched on it really early on. There's still growth forecasts. We'll just go to a break beforehand. Stay with us. Back in a moment.
Looking for a blue chip Gold Coast investment property or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back, everyone. It's Phil Tarrant. I'm host of the Smart Property Investment Show. I'm with the director of the Australian Property Scout. It's a buyer's agency, Sam Gordon, a regular guest on the Smart Property Investment Show. We've seen heaps of growth over 2021, like back end of 2020, once we sort of got through that first phase of COVID and people sort of went, oh, okay, hang on a second, I think we're going to be sort of okay. There's some pretty significant economic impacts, but we started seeing growth sort of late September, early October of last year. And that's continued in accelerated fashion through 2021, one of the biggest years in most people's memories in terms of price growth. A lot of it was just catching up to where it should have been after some disruptions, mate. 2022, what's going to happen? Do you believe the banks in saying there's going to be growth, but it's going to be scale back a fair bit, or do you reckon some areas are going to keep growing at the same speed?
Mate, I do think some areas are going to keep growing at the same speed, but I do think some are going to pull back a bit as well. I don't think that, in terms of pull back, I don't think they're going to go backwards. I just think the rate of growth will slow in some areas. We're already kind of seeing it in some areas as well. What you got to look at is really the areas that haven't seen a significant boom in quite a while. And I think that a lot of them have just started their trajectory and just started their run. I think we'll be looking back. There's going to be at least half a dozen, if not kind of a dozen locations at the back end of next year that I wouldn't be surprised if they see maybe not similar rates of growth as this year, but there'll be some that'll still hit 20% plus. So I'm pretty confident, pretty certain of that. It's definitely not a blanket rule of the whole market's going to go backwards. There's some markets out there at the moment, they're absolutely insane. 20, 25, 30 offers on a property. I'm still talking like at the moment, those 30 odd buyers that missed out on that one property aren't going to all of a sudden disappear just because the banks say the market's going to crumble. So it'll pull back a little, like slow down a little, but I still think there's a lot of locations that got a lot left in the tank.
Is that just a supply and demand scenario where you've got a lot of buyers, all the buyers are still there, but you're just seeing more properties come on the market, which therefore takes a little bit of heat out of that positive price pressure? Most people I'm talking to are saying there's a lot of properties now out there and it's slowing down some markets considerably.
Definitely slowing some markets, yeah. A lot of like the big markets as well. Like you look at Sydney and Melbourne, they had such a good run 2013 to 2017. It was a boom brought about by markets really going into that real shortage of stock due to COVID. I don't think they would do a boom as soon as they did, another boom as soon as they did. So I think there's definitely a chance that they kind of, slow right back down if a lot of stock comes back through. But you'll see there's a lot of other markets out there. They haven't had a decent run in a long time, and there's a lot of pent-up demand there. A lot of people moving as well. So, man, I definitely don't think it's going to be as bad as the banks are trying to predict, that's for sure.
Well, let's wait and see. We're chatting about it now. Maybe they're right, maybe they're not. There's been certain people sort of saying for the last 10 years that property price is 40% overs here in Australia. But one thing we do know is that the banks are pretty prudent in terms of what they'll lend on property. And are you seeing, Sam, valuations stacking up? And what happens in these sort of accelerated markets? So what you pay for a property and what a bank necessarily thinks it's worth are two very different things. Are you getting most purchases in at contract value or a lot of them falling short?
We're very much a buyer's agency and this just comes from like the thesis, of the way that I build a portfolio is we don't pay market value. So we're always, even in the hot markets, trying to get access to stuff. Even if it's off market, what something sold for a couple of months ago, really now it is higher in most of the markets that we're buying in. So I might be buying it at the same money that's maybe 2 months ago. So that off-market ability can sometimes allow us to get that discount. So I can quite honestly say, I think we've only had one property this whole year, and it did happen last month. So it is quite a recent thing that didn't stack up at proper val. It was a market that I had kind of decimated a couple of months before with some ridiculously cheap buyers. And I think that was one suburb in particular that I'd really smashed with some really low purchases. And I think that actually hurt us on that property. So we bought a couple that were proper like renovators, and there were a couple that were like termite damaged. That's one of the big things that I am willing to and kind of love buying myself because you can get it for quite a good discount is termite damaged properties that don't cost that much to repair, but you can pick them up for really good money. We bought about half a dozen properties in this suburb around September. It was August, September. We bought them And then we picked this one up last month and the val didn't stack up because of what we bought those other ones at. But other than that one deal, we haven't had valuation issues on anything that we buy. But that could just, again, be because of the way that we do buy, trying to get as good price and discounted as possible.
Yeah, and that's the challenge they're in, right? If you're buying heavy in a particular suburb, you fundamentally change the valuation. So you're loved by property investors who are buying, but you're loathed by the people who are selling, right? Because
definitely,
because it changes things. And you gave one area, Brisbane, as somewhere that you're operating within, or Queensland, which I'm going to assume you mean Brisbane. I know a lot of people have been holding property up there for quite some time, waiting for some sort of accelerated growth. I think now that is now being realised. What's your view on the Brizzy market? Hold on, and there should be good growth there out of, I guess, for 2022.
I think Brizzy's going to have a big year next year. The level of demand that's still there, and that the lack of stock that's really coming through, I do think it's going to keep on that upward trajectory. As to if it's a time to still keep buying there, that's probably something to really consider, and making sure where you're buying isn't, I guess, you got to look at what you're paying for property kind of 12 months ago compared to now. And all good markets should have had some movement. You just got to be a little wary there. You're not paying, for a property for 500 grand, you're not paying 300-400 grand more than what you could have paid 12 months ago. Because if that's the case, I wouldn't be pulling the trigger on it. But if you've bought there, I reckon you've still got a decent run left in the market. That's for sure.
Yeah, just not as much as should have you bought early on. And we were pretty active up in Brizzy in 2017, I think, 2016, 2017, 2018. So we've been there waiting for quite some time for that market starting to fire. But, this is the nature of property investment. It is a game of time. It's a game of finance. Are you finding your clients are getting access to finance reasonably easy, or it's quite a rigorous process now? That's where most of the stress buying property at the moment is whether or not you're going to get your pre-approval in time to meet your settlement needs or even at the exchange level. That said, getting a pre-approval is a pretty good idea if you're going to be serious about investing in property. Yeah,
definitely. It's one of those things, mate, when you're early on and you're like a PAYG sort of buyer, it can be quite easy, especially at the moment. You can kind of go direct to banks, and a lot of the time they can give you pretty good products and pretty fast turnaround. It's when you start getting a little bit beyond the mainstream banks, where a good broker has to be a little bit creative, potentially. That can be where, I actually had a strategy session with a lady this morning that signed up back in August, and she just got her pre-approval through. So it did take a while. She got an equity release, and then she just got her double pre-approvals that she's going to be going ahead with and working with now. It can be difficult when you're a bit further along the process now. So, I think when you're starting out, it's not too hard a process. You can do it pretty quickly and easily. But as you get a bit more sophisticated, the portfolio starts getting a bit bigger. And it's the same as always, man. The portfolios the finance game does get a little tougher the further along the journey that you get.
Yeah, it does, but it's still relatively the same process, just a little bit more onerous. You need more information. The secret as a property investor is pay your bills on time, never miss repayments, pay your tax, pay everyone at the right time. Just be a nice, clean client for the bank. So even you might operate and you have multiple properties, but if you can present it in a particular way, and a lot of it is how you present it, that shows that you're a very capable and prudent borrower. Banks like lending money. That's the business they're in.
They do. That's how they make money.
That's how they make money. But we're recording this on a Tuesday, Sam, the first Tuesday of the month, which is when the RBA meets to give their read on interest rates. We should have a chat about that because there's a lot of sort of uncertainty there at the moment. We'll stay with us back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant with Sam Gordon, Director, Australian Property Scout. Is it your happiest day of the week or the month is when RBA interest rates happen? Do you sit there waiting to see what's happening? My read this time around is the one shift from 0.1%. What are you seeing, mate?
In terms of my favourite day of the month, it's typically the last day of the month because you got your app and all your rent popping up coming in. I love that. That's my favourite day of the month. You feel
You feel wealthier on the last day of the month, do you?
Yeah, you feel good. Yeah, man. Look, I'm the same as you. I feel like it's going to stay stagnant this year. Keep a bit of confidence going into the end of the year. I reckon in the Christmas period, it'd be a smart thing for them to do. Yeah, it's going to be interesting. It's going to be interesting over the next year or two to see what interest rates do, but that's for sure.
Yeah, the Reserve Bank governor has been reasonably vocal saying they don't want to intervene in interest rates for a period of time, and they're talking sort of late 2023, maybe 2024. That's been a rhetoric for quite some time to support or heal economic recovery. I've been speaking to a lot of very senior people in government recently, and I think that mantra is continued. However, I think they're even now saying, well, the market, whatever that is assuming earlier rate rises than what the RBA has indicated. Rates are an all-time low. The idea is that they want to be stimulating customer or consumer spending to help drive the economy forward. Inflation is a bit of a concern for the RBA and the government. They're sort of looking at what's happening in America right now, and that's really rocketing along. So whether or not that may influence shifting on interest rates at a point in time, let's be clear, rates will go up. It's just a matter of when. And already fixed rates are starting to go up in some banks already. So they're pricing interest rates increases in themselves. And if that's the way it is, that's the way it is. If you're getting fixed rate products now, you need to know that they are on the way up. If you're in the middle of financing at the moment, some banks have interest rate locks where you can lock in a rate today, even though you might not be sort of settling for a little while into the future. Or if it's a pre-approval, it means you can lock in today's rate, and that's still going to be in place when you get to a point. It does cost you a few bucks to do that, Sam, but do you see some of your clients using that as a strategy?
Fixing rates?
Yeah, fixing,
definitely.
but locking the interest rate now on a fixed rate, even though it might just be for a pre-approval and you might be settling on a property in 3, 4, 5 months' time.
Yeah, man, it's a funny one. I'm not seeing it too much from the pre-approval side. But it's funny you bring that up because a few weeks ago, just before they came in, I did some rate locks on some big refinances I had going through, which was on 3-year fixed, 3-year fixed rates, which in that time frame have gone up by about 0.6%.
Wow.
So it was a pretty decent little way to hedge my bets. So I'm pretty lucky now that I did. It was about it was a fair chunk of debt that I'm going through a big refi on. So yeah, it can be. You could have missed it a little bit at this point, depending how far out the purchase is. But yeah, it can be definitely a way to lock it in and I guess cover yourself on that front.
Yeah, it's one strategy. You speak to your broker about that. But I guess the question to ask, Sam, is that how can you future-proof your portfolio today for what is guaranteed that interest rates are going to be going up at a point in time? What sort of tactics, what sort of actions do you see working for your clients?
Now, I think a big one is building in some cash flow deals within the portfolio. I don't think we're not talking about mining towns or full going out in the boonies to get something with 10%. I still think you can stick within good, strong growth locations and still get those high cash flows. But I think it needs to come to a point where you really look at how do you accelerate cash flows within the portfolio to kind of, like you say, future-proof yourself against interest rate rises. There's a lot of people that have probably gone out there and bought potentially negatively geared properties or very low cash flow properties on the premise of the growth and the growth they're probably going to get from that. I think it's probably quite intelligent, and we do a lot of strategizing this with clients, the intelligence behind what do we build out along with growth properties that for us, growth properties still shouldn't be negatively geared. They should be neutral to positive. I prefer positive. But then how are we going to build it out with a nice cash flow stream? Because like we've spoken about before, we build what we call dual portfolios, 2 portfolios, one towards growth, one towards cash flow. And I think it's ridiculously important, like a time like now. Everyone's been used to be getting under 3%, in the 2s for their rates for quite a while. As that does start to increase over the next few years, these people who have gone out there and bought a lot of growth properties or however many growth properties they can kind of afford, if they haven't built in a good cash flow reserve or kind of, a little machine that's kind of pumping some cash back into the portfolio, there's going to be a fair few people that feel the pinch when interest rates start to increase. So that's one of the really big things that we do for our clients. There's lots of different kind of strategies and projects and whatnot you can get out there and execute to drive that higher return, higher than average return. And you can still do them within the good, strong growth location. So I think that's something that a lot of smart investors, and I'm not saying that we tout pretty aggressively to be built alongside a good growth portfolio, is making sure you're building in the cash flow as well, or you're going to get bitten in the arse in a couple of years. I'm pretty certain of that.
Yeah, and the best investors I know are those who build out their portfolio so they can hold their property irrespective of market conditions. And that there is the secret of property investing, is buying good assets and holding them over time. But you want to be trying to put as much money in your back pocket as possible to help service these assets, and don't be scared of positive cash flow. Everyone gets sort of obsessed or absorbed in this idea of negative gearing, which means you get a tax deduction on a negative part of your portfolio. You're better off making money and paying tax than trying to get a tax offset by losing money. Let's be clear. And negative gearing is not an investment strategy, it's a tax outcome, and everyone is absolutely unique. So if you're looking at property on the basis of doing it for negative gearing, shouldn't be the top of your priorities. I no doubt you would agree with that, Sam.
Yeah, mate, pretty strongly.
You're better off paying tax on income rather than well, it's just, and we'll chat about it when we get together, mate. But your portfolio, negative geared, neutral, how's it sit?
So I left work at 28 and travelled most of the world for about 9 months.
Yep.
Didn't do that with a negatively geared portfolio, put it that way. There was some pretty good cash flow at the time. It's a lot stronger. It's a lot higher than that now. Obviously I've executed a fair few deals since then as well. Yeah, mate, she's sitting pretty strong.
It's good.
We can dive into it next month for sure, but she's pretty healthy now for sure.
All right, cool. All right, I look forward to that, Sam, and congrats again on those REB Awards, those Real Estate Award finalists for Buyers Agent of the Year and Buyers Agent of the Year, Australian Property Scout. If I don't chat to you before, man, hope you enjoy the festive season.
Likewise, mate. Same to you. Hope you have a good break, mate, and we'll catch up next month to have a good chat and a deep dive into the portfolio and where it's at.
Absolutely. That's Sam Gordon from Australian Property Scout. Tune in for that. Probably sort of mid to late Jan is when you'll be able to listen to that and Sam's journey as a property investor. I hope you enjoyed that. Remember, smartpropertyinvestment.com.au. Smart Property HQ is where you'll find us on the social media. Favourite for me, it's just not me behind the microphone here. We've got a great team who do all the heavy lifting, which is cool. Allows me to sit behind a microphone and have these chats. So if you can keep those reviews coming wherever you listen to this. Sam, I think, has done one. But I'll ask him again if he hasn't. Tim, get a real kick out of it. That's good. We'll see you next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to secure finance to maximise your returns on your investment property? Finny can help. With access to over 70 lenders, Finny can find the right finance for your unique situation. So whether you're ready to refinance for a better rate, improve your cash flow, release equity to grow your portfolio, or are looking to find the right finance for your next purchase, we're here to help. Visit finny.com.au today to learn more.